Hey, it's Tim. It's about 9:20 and waiting for U.S. markets to open, but emerging, more importantly, is down about 40 bips. The concerns on inflation that we talk about all the time, starting to trickle through in India in the food prices. Again, this is going to be your biggest social concern for a place like India. So food articles came in year over year up 18.3%. They're expecting around 16. The previous number was 14. So the trend's not good. Riots in Algeria, and again, this is over the cost of onions, and I'm not joking. This is what's going on, and I think you have to definitely watch this. I think it's a second half 2011 event, but we've talked about it, and I think ultimately it also leads into the emerging market credit bubble. That bubble may be the wrong word, but it's certainly something that you need to watch out for. So the other themes I think you need to watch, Brazil will be making an announcement on the currency this morning. The new central bank, Tamboni, is somebody that I think the market actually is relatively bullish on in terms of market friendly, et cetera. But Brazil has not been particularly Western friendly with regards to the restrictions they've put on foreign capital flows. So I'm not sure you're going to get anything like that today, but I do think that the currency in both Brazil and then in some other places which have been extremely strong are going to start to lighten up. So the U.S. numbers today, why are we talking about U.S.? Well, ultimately, if U.S. labor is better and there's real sustainable job growth in the U.S., then it's very good for emerging, because at the end of the day, it is still an export story to the West. And as much as the domestic economies are chugging along, and Brazil is certainly as good of a place to talk about a non-reliance on an export market, the view that the global economy is gaining real momentum and at least its traction is something that's very much still in question. Today's jobless claims were not the blowout number people expected after yesterday's ADP number. So the real number tomorrow is the payroll number. Watch that. And if we get a blowout number on that tomorrow, there may be some people that think that the Fed has to come in. But remember, the Fed minutes showed us 3 or 4 days ago when they came out. It's going to take a seismic shift in the economy to really get the Fed off their mark on this one, which is that easier policy is here for a long time. And I think that's where we are. Thanks.